let's get started on when, how, and why to apply for a small business loan. My name is Anthony Kazazis. I'm the director of the NYC Real Estate Expo, and I want to thank you attendees for logging on today. We are going to hear from, we're going to actually learn the unique benefits of the SBA 504 and the Community Advantage Program with Enrique Gomez at Commercial Mortgage Depot. His guests today are Lilibeth Herrera and Lisa Murgatroyd of Regional Business Assistance Corp, RBAC. Our sponsor is, again, Enrique Gomez. Enrique Gomez, with over 30 years of commercial mortgage experience, started Commercial Mortgage Depot in 2008. Commercial Mortgage Depot is a correspondent lender throughout the country, and they also broker commercial loans throughout the country. They work with different banks throughout the country, as well as SBA and hard money lenders. Enrique is a commercial underwriter as well as a certified NAGGL underwriter. Enrique, I'm going to ask you to explain what that is later. He will look at your loan and see what box it falls into. If they can't do the loan, they will also tell you they can't do it and why they can't do it. And they never charge any upfront fees to look at loans. Guys, let's start off with Lisa. Lisa, can you please just give us, under a minute, a little short intro bio on yourself and your company?
Sure. Thank you for having us and hosting this webinar. This is really nice. It's exciting to talk about the program. We don't get to do it very often, especially the last couple of years. But my name is Lisa Murgatroyd. I'm with RBAC, which is Regional Business Assistance Corporation, as Anthony said. I've been in the SBA lending world for 25 plus years, believe it or not, for both non-bank and bank lenders, and most recently with the CDC, and providing both 7A and 504 loans over that career. So I did start out in operations and worked my way through the sales area, and happy to be with RBAC today. So I've been doing 504 loans for about 4 or 5 years, and really truly believe in this program wholeheartedly. RBAC has been in business for over 35 years. We've done, I think it's over 2,000 loans totaling more than $300 million, partnering with banks to finance commercial real estate and other fixed assets, in addition to community advantage loans and microloans, which Lilibeth will talk about. So that's who I am.
Thank you, Lisa. Lilibeth?
Hi, again, thank you for having me. My name is Lilibeth Herrera. I am the director of the SBA 7A Community Advantage Program and Microloan Program for RBAC. So similar to Lisa, I am in the sales role here at RBAC. My function is really to focus on the 7A piece and on the non-real estate transactions, while Lisa focuses more on the 504. I've been in the SBA, I've been here at RBAC about almost 8 years now, but I've been in banking for about 18 years, working both in the private sector as well and as well in the bank sector, and then in the non-bank lender, which is what RBAC is. As Lisa said, I believe in this program. I believe in the good that it does and how it helps not only the business owner, but the community where they're located. And we look forward to answering any questions that you may have and how we can help your business grow.
Thank you, Lilibeth. Our sponsor, Enrique.
Hi, how you doing? Enrique Gomez, Commercial Mortgage Depot. Like you said, I've been around for over 30 years. I've done all types of commercial loans. I'm an underwriter, so I look at loans and see whether they make sense or not. We work with a lot of residential mortgage brokers, lenders as their commercial division, where they feed us the loans and we work with them and say, okay, we can do this, we can't do this, and here's why we can and we can't. And what we're trying to do now is trying to get more involved with different lenders, like with our RBAC, so we can do more webinars and explain different types of programs. Hopefully we'll do some on hard money loans. We did one on cannabis not too long ago. We did one on brokering. We want to do one on conventional. just to educate more people on the different types of loans that we have and the different programs that are out there for everybody. And I want to thank RBAC for being here today and you for hosting everything, for setting everything up.
Thank
Yeah.
you, Enrique. Yes. Enrique, before I have you take it over, please explain to us what an NAGGL underwriter is.
That's NAGO. So what happens is I took the NAGO course for certified underwriting for SBA. That's
Very good.
and, yeah, as well as regular commercial underwriting. I'm certified in.
Well, that's good. I'm glad I learned something there. Yes. So guys, everybody, please, if you have any questions, please put it into the Q&A. I am going to disappear for a little bit for about 40 minutes, and I will be coming back on to ask questions of our team here. And once again, without further ado, ladies and gentlemen, Enrique Gomez.
Thank you. We're going to start off with Lisa. So Lisa, explain to us what a CDC is. What is CDC? What does that mean?
So CDC is a certified development company, and they're not-for-profit organizations that are regulated and certified by the SBA. So we have rules and regulations, just like you do in the 7A program, to follow and we participate with banks and other lenders to provide the 504 loan program. So there's about 230 CDCs in the country, and they're all regional. So we can do financing in whatever specific region we're assigned to. And RBAC in this case can lend in New Jersey, certain counties in both New York State and Pennsylvania. We just cover a pretty broad area of those two states, in addition to the whole state of New Jersey.
A lot of states have their own CDC lenders. So like New York, I have one, PA, I have one as well. So you guys tap into certain areas in New York and New Jersey, but then Florida has their own CDC lenders, California has their own
Right.
CDC.
Exactly. And, many CDCs have, they have lending privileges in other states that are maybe contiguous to the state that they're in. So it's, like I said, more regionalized so that they can cover more area. But, but we're, these three states. And an interesting fact I learned not too long ago is that if we have done a loan for a customer in, say, New Jersey, and they're expanding maybe to Texas or some other state, we can actually do a second loan for them in that state.
Okay. And just work with a bank from Texas for that portion of the loan.
Yes. I mean, whatever bank will do the lending with them. Yeah, sure.
And what is a 504 and how do you use a 504 loan?
Well, a 504 loan is the program is used for commercial real estate purchases, fixed asset financing. So commercial real estate equipment that may have a useful life of 10 years or more. But interestingly enough, we can also include many other things within the financing. So the proceeds can be used for the commercial property improvements, ground up construction. We can also finance equipment within the same loan. In addition to professional fees, for example, in New York, there's a mortgage recording tax. We can finance some of that. We can finance appraisals, environmental reports, title insurance, and other things. So we really can cover a lot within the financing. And what we do is we partner with a bank or non-bank lender, and we provide a portion of the financing. So the typical structure for a regular property that's not considered to be a special use is a bank. So we participate with a bank, and all banks, there's no approval process for a bank. So they would do 50% of the financing, whatever the total project costs are. The CDC would provide 40% of the financing, and the customer would have to come in with as little as 10% down payment. So it becomes more affordable for them to do that because they're not using all of their equity to, say, for example, with a conventional loan where you might need 25 or 30% down. So it's it really helps the business keep their equity within the business.
Okay. And then compared to, I guess, a 7A, where most of the 7As now are adjustables, the CDC 504s, they're all fixed rates.
Many banks will also provide as much as 10 years of fixed portion of the financing. So they'll amortize their loan over a 25-year period, but for the first 10 years, they might have a fixed rate and maybe reset it in 5-year increments. But the CDC's portion of the financing is fixed for the full 25-year period. So again, it also becomes because it's predictable and people can count on what their loan payments might be. It's, you know, it's good for cash flow so that they can prepare.
That's also an assumable mortgage?
It is assumable. So if someone was to sell their property to another buyer, they would still need to go through the qualification process to make sure that they're qualifying for the financing. But yes, it is an assumable loan. There's a few qualifying things that we look at right in the beginning. And one of the things is that the property has to be occupied by the business owner, whoever the operating company is. They have to occupy at least 51% of the property. So the rest of the property can be leased out to third parties, but you know, we need to make sure that that 51% is achieved, because the SBA doesn't allow financing of investment or speculative properties. It's really only for owner occupied real estate.
Okay. And then I guess the benefits versus conventional, I guess the down payment, the long-term fixed rate, because you go conventional, it's like 30% down, 25% down.
Right.
You have a
Exactly.
adjustable.
Right. You're looking at 10% down payment, longer terms, amortizing over 25 years with a fixed rate. And banks really love the program because they're doing 50% of the financing and they're in a first lien position. So of course they have a 50% loan to value. So it's really a lower risk for the bank. What happens though is for a very short period of time, because we go through this debenture process, the way we get our funds is through a debenture sale with investors. And before that actually happens, when the borrower closes on the real estate or on their loan, the bank will close with a first lien in their 50% amount, and then they'll provide 40% of the financing in a short-term bridge loan. So say maybe 3 to 6 months, maybe longer if there's construction involved, but they'll do that for that time period. And then we will, you know, every month there's a debenture sale. So depending on, you know, where the dates fall, we'll take out the bridge loan within probably 2 to 3 months from when the initial funding happened. So, you know, there is that short term where the bank is financing a bridge loan.
Okay, which is the whole 100% of the project.
Right.
Like,
Okay.
90%. Right. Sorry. Yeah, because
Well, 90%, but 100% of the whole 90%, 100% of the loan.
Right, 100% of the financing portion,
financing.
right? So whatever's not financed by the borrower.
Okay. And we can do all types of businesses, restaurants, gas stations, gyms. Virtually
Most
anything.
businesses, most service, retail,
Medical.
wholesale, medical businesses, warehouses, gas stations, childcare centers, franchise businesses, you name it. There are, you know, there's a short list on the SBA's, in the SBA's SOP for those who know what I'm talking about. And they outline the things that aren't eligible. There's a very short list. Gosh, I can't even think of one right now. Lilibeth.
Well, Lucille Roberts, for example, is one. It has to be available. It has to be open to the general public, right? So if you have a woman-only type of establishment or man-only type of establishment, SBA won't finance that.
Right.
And 7-Elevens also weren't, they still are not, right? 7-Elevens? You can't finance through the SBA?
Oh, yeah, because 7-Eleven is actually that particular franchise is has too much control by the franchise. The way I think they actually have to pay the franchise and then the franchise pays them. I forget how it works exactly, but yeah, the control.
It's like you're buying something to be a boss.
Yeah, exactly.
So Lilibeth, talk to us about the community programs and the micro programs.
Sure.
What are they compared to like the 7A loans or the 504s?
So, yeah, sure. So the Community Advantage Program is a subsection of the 7A program. So if we follow the same 7A guidelines, for those of you that are familiar with the 7A products that are offered at most of your local banks, it's, and it's a guaranteed loan program by the SBA, right? So SBA allows, so basically SBA gives lenders a guarantee to take a little bit more risk on certain transactions, right? So if it's a transaction that maybe doesn't fit the normal bank criteria, SBA will give a guarantee of anywhere from 75 to 85% to the lender if the loan was to default. So we as a nonprofit community development organization offer what is called the Community Advantage Program. And basically that program came about in 2011 as a result of what the business owners were asking for, right? A lot of business owners were saying that the big banks or their local banks or traditional banks do not have an appetite for smaller transactions. So maybe loans under 250, or they were looking for loans of $1 million and up or 500,000 and up. So SBA decided to create this pilot program called the Community Advantage Program that's only offered through us, through community development organizations, and it's and mission lenders, because our goal and our mission is really to serve the underserved business owner. So they created this program so that we can fill in that gap. So if maybe, for example, your local bank or your bank doesn't do a particular industry, for example, as we were just talking about a few minutes ago, maybe there's an industry that your bank says, you know what, I don't want to do restaurants, for example. We don't have those restrictions. We try to follow those guidelines according to the SOP, as Lisa referenced. And that's SOP is the standard of procedure for the SBA. So as long as the deal makes sense, as long as we can get comfortable with it and it's an acceptable risk, we can help you, even if your local bank may have turned you down under their normal 7A program or even their conventional program. So that's what the Community Advantage Program is. Because we're not a full service bank and because we were developed just to fill that gap, we can only go up to $350,000 on our loan amount. Traditional 7A loans go up to $5 million with the banks. We don't go up that high because again, we're not trying to compete with the banks. We're trying to just fill that gap. So if you have a need of $250,000, it used to be $250,000 actually, the cap, up until May 31st of this year. SBA, again, because it's a pilot program, they're still making improvements and listening to what business owners say and what they want, and they decided to increase that loan amount, that maximum loan amount to $350,000. In terms of the terms of the loan, we follow the 7A guidelines. So if it's a non-real estate transaction, typically we go 7 to 10 years is the most common. If there is real estate involved, and I have done a 7A loan for for smaller property purchases, maybe in certain areas where you can find a property for less than $350,000, we'll do a 7A Community Advantage Program for $250,000, $300,000, depending, or maybe the borrower has their own money to inject and all they're missing is the $250,000 or $300,000. So we'll do that, and we can go up to 25 years on that term, on that loan. Our rates are, as most 7A loans are, based on prime, so they're variable based on prime, which right now is a hot topic, right? Because prime is continuing to go up. We try to keep our spread as low as we can, so that it doesn't have such a huge impact on our small business owners. So right now we're at prime +2 is where we start, and we try to cap at prime +3. Again, it's still very competitive in terms of what the alternative options are out there. Mm-hmm. In some cases, sometimes we can do a microloan for a 7A loan for $25,000, and the borrower says, oh, well, I can use my credit card, but credit cards are charging 15, 20, 25%, right, on that balance. So
merchant accounts are killers at 20, right. 24%.
Yep. And and above, I've seen before the inflation was, before the rates were this high, I saw rates of 30, 35%, or some borrowers that just didn't even know. They didn't ask, they didn't disclose, and they were paying 35, 40% interest rates on certain loans. So these are very competitive, very affordable loans that are available. In addition to the Community Advantage program, we also offer the Microloan program. And the Microloan program is very similar to the Community Advantage program, and except that it's not a guaranteed program. So it's not guaranteed by SBA, but what SBA does allow us to do, again, it's only available through mission-based lenders and CDCs and CDFIs like us, is to borrow from the SBA directly at very low rates so that we can relend it at very low rates to the small business community. But those are smaller loans. Those are loans capped at 50,000. But you know, it depends on the business. You may need a new stove, right? Maybe you're a restaurant that needs a new stove, a new refrigeration system, a new HVAC system, and you're not looking for 150, 200,000, but you need 50,000. The microloan program may be an option for you. One of the best benefits, especially right now, is that it's a fixed rate. So the fixed rate, typically our rates were fixed at starting at 6%. Currently, we're running microloan programs where we're fixing the rate at 2%, right? So 2% up to 7 years. That's in this market is free money, basically.
Right. That's crazy.
So we have programs, you know, to fit pretty much every need between our 7A program, our microloan program that can be used for working capital, marketing, inventory, pretty much any business need. And then, you know, the 504 program that Lisa just mentioned that can really get you, get the business to the next level by acquiring assets that are going to help the business, that's going to help the business grow. We can pretty much fit all, you know, fit the needs of, you know, fulfill the needs of all business owners. And again,
how long do they have to be in business in order to apply for a loan?
Yeah, so that's the beauty about our programs. SBA allows us to do a startup loan. So we could do a startup loan. You don't have to be
in a micro community.
Under all three programs, we can do a startup loan. You know, again, it has to make sense, right? It has to have, the owner has to have experience. They have to have money to put into the project. There's no such thing as 100% financing. Then I get that question at least 5 times a day. So there is no such thing as 100% financing, but we can do something with as little as 10% down, which is, you know, not, it's very close, pretty close to 100%. You know, they have to have experience, like I mentioned. They have to have money to put into the project. We look at the personal credit of the business owner as well. I mean, that's going to be a big determining factor in terms of the credit worthiness of that person or those owners. And again, it's just we take all of that together and we assess the risk. And if it's something that we can get comfortable with, we can definitely finance a startup. Like we just were talking about in the beginning, we just financed a startup restaurant in Hoboken, you know, where the client has you know, they had a lot of money to put into the project, they had good credit, and we were able to do a $300,000 loan for them for leasehold improvements to open up a restaurant in Hoboken. So we do startups all the time as long as they make sense. Oh, and that we definitely require business plans. That's another question that I get very often. You have to have a business plan with financial projections and assumptions, and we'll take a look at it.
And the lease also has to be for the term of the loan. So if they have a 5-year lease, they're getting a 5-year loan, or
correct.
Okay. So they have to make sure that they're going to be there for whatever amount of time that loan is for.
Correct.
Okay.
The challenge with a 504 loan, getting a startup or projection financing is having a bank that wants to participate, because banks, you know, every bank has their own credit policy. And so we try to, if we run into a situation where we have a bank that brings us a loan and then they decide they can't get it done for some reason, that not meeting their credit criteria, we will actually try and help them find another lender, another bank. We've worked with so many different banks. We kind of know a lot of what they'll all do, and we have a very strong network of business development officers who all have contacts at various different banks. So we rarely don't get a deal done because of that reason. So unless there's some other reason it can't happen, but you know, we can typically find a bank that wants to work with it.
Okay, just try and match everything up. And what do people need besides the projections? I guess the tax returns. What else do they need to start up to apply for a loan? What would you need from them in the beginning?
As a startup, or as just
or in general?
Just in general. We just both of us need the same thing. So I guess I can start the answer here is with the 504 loan, I try and work simultaneously with the bank at the same time so that we are approving together and that we're not wasting time. And that's the best way to do it, is come to your CDC right away and start the process as soon as possible, instead of if you're trying to put them into a conventional program and it's not working for whatever reason, and the bank decides they need to go 504, sometimes you waste a few months doing all that until you get to the 504 process. So it kind of helps to offer them everything that you have, and let them decide what's best for them. But anyway, what you do need is 2 years of tax returns for the business. Any affiliate businesses that any of the owners or guarantors might have, we'd need those tax returns. 2 years of personal tax returns, a personal financial statement, debt schedule for the business, interim financial statements for the current year, all the things that a bank would want to. And of course, it helps to have a summary, or to talk to the borrower to know and understand the business, what they're trying to accomplish, what the business does, how it operates. We need to be able to communicate that to the SBA, just like the bank does to their credit team. So it's, we're looking for the same information that a bank would be looking for. We just have more flexibility within our credit policy, or the SBA's credit policy than a bank might. So am I missing anything?
I think that the biggest thing that everybody cries about is the length of time. And I tell them, even conventional mortgage right now, it's taking 3 to 4 months just to do a regular commercial loan. How long is the whole process takes with the SBA? Well,
with the 504 loan, we send everything to the SBA for their final approval. So if I get a loan on my desk today and it's a complete package with all the things that I need to submit to an analyst, then it'll take us about 7 to 10 business days maximum to get through the credit process. And then we have a credit committee. The credit committee has to approve the loans. I mean, it's part of the process with any CDC. And after that, we have to submit it all to the SBA, and then they have to approve it. Now, when we submit everything to the SBA, I'm talking about appraisals, environmental reports, all of the things that we need to do our due diligence. The SBA will have to review it also. So the good news is that we all have a lot of experience with what's acceptable to the SBA and what they need to see in all the reports and in the write-ups and so forth. So we make sure that all of that information is covered. So if we ask for maybe more information than you're expecting, instead of asking why, just trust me, we need it. We're asking because we need it, and just submit it. And that will take a week off the process if we don't, waste time asking over and over again. It just really does help to have cooperation. The SBA is probably taking about, I want to say, 7 to 10 business days also for their approval process. So you're looking at, it could be a month and a half for the whole thing. And then, of course, closing could take up to another month, depending on, how long it takes to get all the closing requirements together. Appraisals and environmental reports are taking 3 to 4 weeks to get. And, I would say maybe 6 months ago it was taking even longer because of the volume of real estate that was being transacted.
Now they have a lot of time.
Yeah, and I think it might be slowing down just a little bit, but still in all, you want to make sure you're prepared and that you have all of your ducks in a row. We have a checklist that we would happily provide to anyone just to show you what's going to be on the table, what we're going to need. And, it'll just make
a lot of people think it's a lot of work, but you have that. Like right now, I'm working on the deal where it's a Meineke muffler place. They're buying a building they're renting, but they own 7 Meineke mufflers. So I had to get 7 separate tax returns of all the business.
Yeah.
And it's just basically gathering, and people see that and they think it's major. Just get the information. The accountant has all that. It's not that hard. And,
exactly.
We'll review it. So I got to review 7 different tax returns. Yeah.
We'll work directly with an accountant. If the borrower doesn't want to spend time getting all those details together, we, with permission, of course, from the borrower, we'll go right to the accountant and let them know what we need, and have them send it directly to us. It really sometimes helps the process a lot because accountants know exactly what we need. They know what we're talking about. They know what financial statements we need, what an accounts receivable and payables statement is. I mean, they know, all the terminology,
Yeah.
financial terminology, maybe somebody might not be that familiar with. So
Yeah, I get a lot of guys, they say, look, I fix cars, my accountant, I'll fix your car. I know nothing about papers. Go to my accountant or whatever profession they're in. That's all they want to do. They don't want to know numbers. They don't care. Just call the accountant. And I work with a lot of accountants and they give me all the information I need. And it could be cumbersome because there is a lot of paperwork. I mean, some of
Yeah.
these files could be 3-4 inches thick by the time you're done with them. But it's still the same time frame if you get everything up front. And I tell a lot of brokers, just get everything up front. And it right now on a regular commercial loan, it's taking this long. For whatever reason, I don't know why, but it's taken 3 to 4 months to close a regular commercial loan. So SBA is not that off, in this time.
yeah,
And
and-
sorry, go ahead.
Yeah.
no, go ahead. I'm so sorry.
I'll just chime in and say real quick that on our 7A and our micro program, we have a little bit more flexibility because we are a preferred lender of the SBA. And what that means under those programs, right? So what that means is that we can, we don't have to submit everything to SBA for an approval. They rely on our underwriting and our approval. And we can get an SBA loan number very quickly. So, for the deals that are, pretty straightforward, we can do the underwriting process, get it approved by our board, and potentially get you an SBA loan number within 24 to 48 hours, right? So it's a much quicker process. It could be, but again, it's all dependent upon how how much information you are able to give us and how quickly you turn it around. Because if you take too long, we move, it just kind of complicates. Something may expire, right? So if you took too long to provide us something else expired, and now you have to resubmit.
Yeah.
So it's just a matter of how prepared you are up front, and the process could move. I have done loans where I have moved them, or even that we have been able to approve it quicker than a conventional bank loan program. So it really depends on your willingness to provide information quickly.
So on these small loans, what kind of valuation do? You do your business valuations when they're getting a micro loan or a community program loan, because it's mainly business, not real estate, or do you do an evaluation on a business?
So we rely on historical, right? So we rely on the historical cash flow of the business. So we'll look at, what the revenue trend has been in the last 2 years. If the cash flow, our cash flow requirements may be lower than traditional conventional banks. So we can go very, based on the historical financials. If it's a startup and we're relying on projections, it's just how well those assumptions are, how detailed those assumptions are. And how much research and knowledge you have of that industry. I always use this example, and it's probably not a great example anymore, but I had a coffee shop one time in Weehawken, I believe it was, startup coffee shop business plan, and they anticipated in year 1 they were going to make $1 million, right? And I said, okay, that may be so, but why? How many cups of coffee is that? And there was no support for that. So obviously we can't get comfortable with something like that because we need to understand how you're going to reach those numbers. But we work with borrowers and we kind of explain that to them, because part of what we do is also education and teaching them and helping them understand how to prepare for a business loan. But for the most part on existing businesses, we rely on historical cash flow.
Okay, you're not looking at if their business is worth 400. What are you using as collateral? Are you taking anybody's house for collateral if they have it with equity, or are you putting lien on the house or no?
If we need it, yeah. I mean, we're going to try to collateralize the loan as much as we can to up to the loan amount. So if there is, again, it's all about risk, right? So if the deal is very risky, but there is some collateral that makes us feel a little bit more comfortable that we're going to get paid back. So we may take a home as collateral. If the deal is strong, if the cash flow is strong, the business is strong, the owners, the guarantors are strong, we may not take a home as collateral. Just because we feel confident that the business will pay back and there's enough probably equity in the equipment or the assets of the business. But yeah, if If there is collateral, we're gonna look to see if it's gonna add strength to the deal. But if there's no collateral, we won't turn down the deal if it all makes sense, just because there's no collateral. That's what the SBA guarantee is for, is to make us more comfortable. So if your deal makes sense, if the business has cash flow, you have good credit, and you don't have collateral, that's not a reason to deny the loan. We will still move forward with that.
Okay.
To Lilibeth's point, the SBA guarantees up to what is it on a community advantage, 85% or 75%?
85% of if the loan is 150,000 or less, and 75%
Right, okay.
like that.
And with a 504 loan, the SBA guarantees 100% of the CDC's portion of the financing. So, that's part of why we have more confidence, or why we have that flexibility, because the SBA is guaranteeing a portion or all of the financing.
And there's no guarantee for the bank that's doing 50%, right? I mean, they have plenty of equity, so.
No, yeah,
There's
they're in a first lien position. They've got 50% loan to value. They're collecting first if there's ever a liquidation. So it's the CDC that stands to lose.
Okay.
And now that you're mentioning fees, another benefit about the SBA, especially in fiscal year 2023, which we're in right now, which started October 1st, is that on the 7A loans, there's usually a guarantee fee to the business owner, right? To the guarantors of, depending on the loan amount. In the past, it used to be up to 3% of the guaranteed amount. In fiscal year 2023, that has been significantly reduced, even on the larger loans, but on loans up to 500,000, there's zero guarantee fee. So that means that that's a huge savings. So if you're looking for financing, and you're thinking about it, and this is the time to kind of start inquiring about it, because you would save yourself a lot more money. And these fees are assessed every year, depending on basically how self-sufficient the program is, so that we don't have to rely on Congress or Washington to allocate funds, because that will never happen. But it's something where right now it's a great time. You're saving. It could be a savings of $5,000, $6,000, $7,000, depending on the loan amount. So it's a good time if you're thinking about financing, to kind of start acting on it.
So loans under $500,000, there's no fee, no guarantee fee?
500,000 and below, there's no guarantee fee.
For 7As also, or just?
Yeah, this is for 7As. So again,
For
when
7As.
I talk about 7As, it's community advantage part of 7A. So yeah, it applies to all 7As.
Okay, and then for loans over $500,000, what is it? 3%, 3.25%? How much is it?
I have to check on this, but I believe it's 0.55%, which is still significantly lower than what it's been in the past. But I just don't know. I don't know if that's capped at a certain amount, because I only go up to 350. I kind of just worry about my program, but I'm pretty sure that loans above 500,000, the guarantee fee is like 0.55% of the guaranteed amount. So if your loan is $1 million and the SBA is guaranteeing 75%, right? You're only paying a guarantee fee on the 75%, not on the full $1 million.
Not the full amount.
Not the full
75
amount.
or 85%?
No, if the loan is under 150 or below, it's 85%. But if it's over 150,000, then the guarantee portion is 75%.
75?
Mhm.
Okay, I thought it was 85.
No, it's only, I wish, but no, it's only up to 150.
But up to 150, I mean, that's still.
Also, we have a lot of mortgage brokers online that are listening. You work with mortgage brokers as well, like me. So you do work with a lot of mortgage brokers, and you just walk them through the process and show them what they do. There's also a lot of guys that do projections and could do a package, put a package together. I can't think of the company that does the packaging for a lot of the SBA loans. SBDC, right? You work with them also and help them out. And a lot of people go to them to get the packaging for the SBA, to get ready for the SBA loans, or the SBDCs. Okay. Yeah,
I mean, again, we're a community-based organization, so we work with everyone in the community, whether it's an SBDC, a broker, a bank. Most of our loans are referral based, so we generate a lot of our loans from. And I don't know if we mentioned this, but RBAC is the #1 504 lender in the state of New Jersey. and in the top 10% in the country, as well as the top community advantage lender in New Jersey for the last 10 years, with no close second. So
Pasmino's working hard, huh?
Yeah.
is working hard, yeah.
He works hard, Pasmino.
Yeah, so I mean, we're pretty active. We know, we if the deal makes sense, we want to get it done, right? So so absolutely, we'll work with anyone that is willing to work with us. So yeah.
And now also is a good time to refinance a lot of these 7A loans into a 504, because right now, I guess, did the rate go up yet today?
Not today yet, but I would imagine tomorrow. I think they're meeting today. Yeah.
So prime's going up.
Another
and with those
3/4
adjustable
of a
rates.
point. Yeah,
Yeah.
and I think, they're saying December, there'll be another jump too. So, I mean, the maximum interest rate that you can charge on a 7A loan is 2 3/4 over prime. So if prime jumps up to, I'm,
About
don't have
8%.
it.
8%.
Yeah.
Anticipated.
It's
So
going to be
you're-
about
you're-
8% by the end of the year.
Yeah, so if it's 8%, you're looking at 10 3/4% as your maximum. And most of the time, there are banks that do fixed rate mortgages for 7A, but most banks do quarterly adjustable. So if prime goes up or down, the rate will adjust in the next calendar quarter. So, for example, if you have a loan and the rate goes up, and say you have 2 over prime, by January, you're going to be paying,
The
10% on your loan, right?
10 to
So-
10.5.
Yeah, it just depending on what your interest rate spread is. So, but here's the thing. To refinance, yes, we can refinance a 7A loan, but there are some rules around it that the SBA is pretty strict about. And the two main things are at least 85% of the use of proceeds from the original loan have to have been used for a fixed asset, such as real estate. That would include the construction or whatever else. So it has to be real estate related. In addition to that, we have to make sure that there's at least a 10% savings within their current principal and interest payment. And they do have to go back to their original lender and at least get something in writing from them that they're not willing to, adjust their rate or make a change or modify the loan terms. Most of the time, banks are not willing to do that because, 7A loans are sold on the secondary market. And when they're sold on the secondary market, they really can't do anything to make changes or adjustments to those notes. They're gone. They're invested. So, it's pretty easy to get that. But if you work with a bank that doesn't sell their loans on the secondary market, there may be, some wiggle room for a bank to make that change. So you do have to go back and get that. We do need that in writing. So I would say the first thing that I would want to see if I were going to refinance a 7A loan is a copy of their original authorization, just to see whether or not we meet any of those criteria. And then, but really now is a very good time to strike, because I know one of the questions someone had was, what is the current rate for the CDC's portion of the financing? And right now, for a 25-year term, we're looking at 6.22% on our loan for the full 25-year term. Sure, it's a little higher than it was like within the last 2 years, but you're talking about an anomaly with COVID, that interest rates were at an all-time low. And if you look at the history over time of the CDC's rates or the debenture rates, you'll see that this is pretty much in line with what those rates were in the past, I should say. And also they're always below market. It's not going to, most likely the interest rate for the CDC's portion of the financing will be lower than whatever bank they're working with. So when you blend the term or blend the interest rate, that's
Still, you're going
probably
to
the
save the
best way
10%.
to do it.
Yeah, you're going to save
Right.
the 10%. And what are the loan amounts? So see, Anthony's
Well-
coming up already. The loan amounts for the 504s. What's the maximum loan amounts?
Yeah, our maximum loan amount is 5 million or 5.5 if you're a small manufacturer or doing a project that is energy efficient. So, we can, of course, work with you on that and see, whether or not you meet that criteria. So
That's your portion of the loan. That's your
yes.
portion of the loan, so we could do a $10 million loan.
Well, my portion of the loan would be that would be the gross debenture, so including the CDC's fees, or the SBA fees that get rolled into the financing. The maximum would be 5 million, yeah.
Okay.
And we figure all of that out, so there's no secret as to how much it is. But we can do projects that are larger anyway, because the bank can do a larger first lien. They can do, if the project is 12 million and I can only do 5, the bank, between the equity injection and the bank, they can cover the difference.
The difference, yeah, so you could go up to a $10 million project.
You can do larger projects.
We've done
Just
$25
depending on the
million
bank.
projects.
Yeah, depends on the bank's
So-
appetite.
Okay.
Yeah, whatever.
And the equity injection, right? Maybe the business owner has more equity injection to put
Exactly.
into it. So
Exactly.
we've done, I think in my time here, I don't do them, but I've heard and I've seen the packages where we've done $25 million, $30 million projects. Obviously, our portion is capped, but that doesn't mean the project is capped.
Right.
Because there's other ways to finance,
Right.
to cover the difference.
Exactly. And, on that note, if you're financing a startup, you'll need 15% equity injection. If the property is considered to be a special use, and I'll give you one example of what a special use property is. If you have a building and it's got all refrigerated rooms and so forth, that property is going to be considered a special use property. I have one right now that I'm financing, and that's exactly, so they needed to bring in 15% equity injection. If it's a special use and a startup, you need 20% injection. So, depending on the situation, and there's a short list of special use properties. It's not like, every business, like a childcare center, for example, is not considered a special use property, and you would only need 10% equity. Unless it's a startup. Anyway. Hi, Anthony.
Hey.
How you doing, everybody? Hey, very good panel, very informative. So it's a nice one. Congrats, guys. I was very impressed. We do have some questions, and we also have some questions that were mailed in. So I'm going to start off with what's here with Q&A as of now. Larry, what is the permanent second mortgage rate today?
Yeah, I said earlier, it's right now for the month of October, it is 6.22%. That changes every month depending on, with the debenture and the investors, they go through that whole debenture process. And whatever the 10-year treasury yield is, and whatever the investors and the central servicing agent, they go through this process every month. When we sell the 504 loans to the investors, said it again, that will change. So every month it does change, but right now it's 6.22. And you can check with us every month to see what it is. Yeah.
Got it. It's definitely posted on your website, or?
I think it is, actually.
Okay, that's good.
Is it?
Orkim Davis, I want to purchase a mixed-use property. It's selling for 2.2 million. Can I apply with the Community Advantage Program for assistance with my 10% down payment? I think that would be yes. Or
well, that's a loaded question, right?
Not as a down payment, no.
Yeah,
okay.
no. So that's a loaded question, because we only finance owner occupied transactions, business transactions, not investments. So if you're looking to buy a mixed use property as an investment, then you don't qualify for SBA, period. So that's the first part of your answer. And no, you cannot borrow money for injection. Typically when we say injection, it has to be money that you have saved, or that you're bringing into the project, or that was gifted to you. Most lenders, as well as RBAC, we don't accept borrowed money as injection, because that all you're doing is taking on debt on the business, right? So if it has to get paid back, that's just more debt that the business is gonna start with. So we don't accept borrowed money as down payments. No.
And the mixed use property, if they're gonna run their business there, like a daycare or a restaurant, they have to occupy 51% of the space of the mixed use property. But like she said, they have to put their injection. They can't borrow from a micro lender to put a down payment.
The only type
Yeah.
of borrowing that we do allow, and we have done in the past, just FYI, is if you have a home equity, for example, right? If you take out a home equity personally and you borrow money from your home equity and you have another source of repayment for that home equity. So not from the business proceeds, but if you have maybe an outside income, maybe you have a spouse at home or someone at home that can pay that and they're guaranteeing the loan, then that may be an exception. But as a rule of thumb, just think that injection cannot be borrowed money.
For both programs.
Got it. And you have to show proof of the injections that it's in your bank account, right?
Yes, you do.
You
It
have
has
to
be
spend it.
seasoned.
You have to spend it first, right? So if you're buying something and you want to, under the 7A program, and the same as the 504 program, and your injection goes towards that purchase price first, and then the borrowing comes in, right? Then the SBA. Same thing with the 7A. If you're buying a machine and the machine is at 100,000, you need to put your 10,000 first before we lend the 90,000. So yes,
Right.
it has to go in first.
But we do want to
Thank-
see that the money's been in an account for 2 months before it was actually used too. So it has to be seasoned because again, it's another way of showing that it wasn't borrowed. And you know, when people borrow money, it does show up on a credit report, which we will be pulling
fine.
because that's part of the due diligence process. So
Max
you
out
know,
on the
it's not
credit
like
cards.
you can, yeah, you have to really, you know.
Have that money. earned.
Is it 2 months or 3 months of bank statements?
Well, we look for 3 months, so it's the month that the funds came out and the 2 months prior. So it's
Okay.
3 months of bank statements.
Good. Thanks, guys. Thanks for clarifying that.
Mhm.
Israel, are brokers able to be paid a fee?
So I'll start that under the Community Advantage Program. We do pay a fee, a broker fee. Again, we ask that you help us, right? It's not just sending us a lead and then disappearing from the process. If you're a broker that's going to help us gather documentation, get questions answered, we're going to work with the client directly, and that's part of what we do. But we do appreciate, we do need you as a broker to assist us in gathering documentation to get the loan approved, as well as to close in order to be paid a fee. But yes, we do pay a broker's fee.
Good.
And
Sean
typically
Hood.
on the, yeah, I'm sorry. So I was going to
Oh,
say on the 504 side, typically if a broker's being paid from a seller or not a seller, from the buyer or from a bank, you know, we will not pay a fee. And if we did pay a fee for something, it would most likely be case by case, but SBA really doesn't allow brokers to be paid by more than one source. So if the buyer's paying a broker, that should be where it stops. Anyway,
On the 504.
right.
Thank you. Thank you, Lisa. Sean Hood, would you allow seller financing as a down payment?
So
Seller
there's two.
financing?
And on the 7A side, I'll speak for the 7A side. We do consider that as long as you're not making payments on that seller financing for the term of the loan. So if we're doing a 10-year term, you cannot make a single payment to that seller until our loan is paid off in full. And that's the requirement. Because it's basically at that point it's considered equity, right? So equity cannot be borrowed like we talked about before. But as long as it's on subordinate, that note is subordinated to us, then we can.
Pretty
Okay.
much same for the 504 loan. And, you know, you have to come up with your 10% equity, right? And if the seller note is beyond that 10% equity, we probably would allow payments. But if it's part of the 10% equity, most likely not.
Ashish Garg, I have a deal where a doctor wants to start his private practice. He is currently on W-2 with VA, wants to start his private practice and eventually move full-time to a private practice. He wants to buy a commercial property for $475,000. What is the max loan I guess you can offer under the 504 loan program? He is a general practitioner.
Well, for a $475,000 purchase price, he'd need $47,500 for his down payment. So the difference would be financed. 50% of that by a third-party lender, which is a bank, typically, and 40% of that from, well, if he's a startup, then he's going to need 15%, sorry. So 35% CDC and 15% equity.
And how about for the equipment and working capital? Would that be part of
Well,
the,
absolutely. If he's
they gotta fit
financing,
it out
if he
the
wants
building
to.
also?
Yeah, what we would do, the conversation would be, what's the project? What are you going to need? This is a startup practice. Do you need any improvements? Do you need equipment? We would include that all into the project costs, including the professional fees, which we talked about earlier, such as the appraisal, title work, environmental reports, and so forth. So we would take that whole amount and we would say, okay, 50% from the bank, 35% from the CDC, and 15% from the borrower. So the borrower would have to contribute 15% of the total project costs.
Because that 450 could jump up to $600,000 easily.
Absolutely.
Yeah, especially for a doctor, yeah.
Yeah.
And that's and I just want to touch on that real quick also, because we've done a lot of programs, a lot of combination programs where we'll do a 504 for the 504 legible portion of the finance of the loan, and then we'll combine it with a 7A. So we do that often. So maybe there's a project, and it reminded me, because I think you mentioned working capital. Working capital cannot be included in the 504 project, but it can be something that it's an eligible use for the 7A. So maybe Lisa will structure that she'll do the 504 for the eligible 504 expenses, right? And then she'll bring me in on the project because they need a $75,000 or $50,000 working capital loan. So in essence, the client will do the process together so that the client gets the loan gets approved for both loan programs, basically a 504 as well as a 7A.
Hey, guys, these questions are not posted up on Q&A, but I'm going to read them off to you. With the banks tightening their credit box and capital becoming harder to obtain for small businesses, how can RBAC accommodate borrowers, and what rates and terms can they offer with the Community Advantage program and or other lending programs?
Yeah, so we spoke about that. I mean, so the truth is that SBA programs do better when the banks start tightening their credit box, right? I mean, it's just kind of the way it works. We start to get a lot of the deals that the banks are not able to finance or are not willing to finance. So we can absolutely, right now we are continuing to get busier and busier and busier because we see the banks are tightening their credit boxes. So we can use a community. That's what the base, the sole function of the Community Advantage program is to support those business owners that don't have access to conventional or traditional bank financing. So we can absolutely consider them for a 7A Community Advantage program under the up to $350,000 loan cap, and depending on the loan term, we can do depending on the loan, on the purpose of the loan, we can do it either 7, 10, or 25 years if it's a real estate transaction. And as well as the microloan program, maybe they just need a small amount of financing. So we can do the microloan at 2%, starting at 2% interest rate. So we definitely have options for business owners that don't have access to bank financing.
Okay, thank you, Lilibeth. What effects in this vast array of government programs having on lending arena?
I think I'll take a stab at it. I don't know if this is what they are asking, but SBA has been around since, I want to say, the Carter administration, right, Lisa?
Yeah.
I mean, it's been around for a long time.
It's been a long.
So it's not a new program. It's not a new concept. It's not a new idea. Again, as I mentioned previously, it all depends on the state of the economy and how utilized it is versus the rates, bank appetite, bank temperature. So in the recent years during the pandemic, obviously we had these newer programs that came into the mix, which was the PPP and the EIDL. Those are pretty much gone at this point. There's no one receiving PPP financing for sure. There's no EIDL money unless it's a disaster situation. So we're back to the core SBA programs. The SBA programs are, the flagship program is the 7A program of the SBA, and it's been around for a very long time. And then the 504 program is second. If not, it may actually be competing for the top place with the SBA right now because of the great success that the 504 program has had in recent years. And the microloan program has been around. We've been a micro lender since 1998, so it's been around, 25 years at least. Or 1993. Sorry, 1993 is when we started as a micro lender. So none of these programs are new, and I think that they're only going to be more beneficial, more prosperous as the economy, kind of finds its way into whatever state it's gonna eventually end up, I guess.
Okay.
I agree with what you're saying, and that, right now with the whatever inflationary things that are happening and the banks tightening their belts, the SBA programs just become more valuable. Because, it's meant to serve the public and to the underserved or those who are having trouble getting conventional financing during these times when banks aren't able to do it. Or if they, they need the SBA's assistance or the SBA assistance.
Good. It's true, Lisa. Kindly provide more details on the application process. And are there any grants for businesses that are in socially and economically disadvantaged communities that are in the red line and bank deserts?
I think the grants you get from the cities, because a lot of cities do give money. I know here in Jersey, there's certain cities that give grants for people, to get things going in downtown areas.
Yeah.
As for the other stuff, you guys can handle that.
Again, I mean, there's no redlining with SBA. It's, for us, we are here to serve the underserved. So if you are not able to get financing, that's what we're here for. That's the core of the SBA, is to help those people that are not able, that are underserved, basically. So I don't know how to answer that question exactly, other than that this is what we're here for, and we've been doing it for a long time, and we'll continue to do that.
And I think a lot of stuff has to make sense. A lot of people, you have to have a business plan. You have to know where you're going. You can't say, well, I'm in a bad area, so they're not giving me money. You have to go in with a plan. You can't just go in there with a negative attitude saying, they're not giving us anything. Right. You have to go in with a plan and say, here's what I want to do. And sometimes you won't have the money. You might have investors or angel funders and someone who'll back you up. There's a lot of times with real estate where, someone finds a building, but they have no money. So they'll find a bunch of people and put them together. So sometimes if you want to start up a business and you don't have the funds to start the money, you could get investors or friends of yours to put a pool together and invest. The area, I tell everybody, we don't care if you're white, black, male, female, whatever gender you are. If it makes sense, it makes sense. If it doesn't make sense, it doesn't make sense. The deal or the numbers. We all look at numbers. So we really don't care who you are as long as the deal makes sense.
Right. I mean, it's about numbers. It's about the story. It's about how prepared you are to run that business. And that's what we want to know. Because at the end of the day, all we care about is, are we going to get paid back, right? So if we get paid back, we continue to lend in the community and continue to help others. So it doesn't matter where you come from, as long as you can make us feel comfortable about getting paid back and the deal makes sense. Yeah.
I mean, the character of a person too does come into play a bit, because we do look at personal credit. We look at, we have to look at things like arrest records and things like that, bankruptcies and whatnot. So, we do consider all of that stuff. It's part of the whole package, One of the things that I think Lilibeth, you touched on earlier, is a small business development center, or there's another organization called SCORE, which is the Senior Corps of Retired Executives. And these are people who actually will sit with, new small business people that want to open a business, that may be trying to expand, trying to find a way to get financing, and they will help them put their business plans together, help them put their projections together, and explain how to prepare assumptions to your projections and all of that stuff. So, they may find, new people will find that very helpful to work with these organizations that can spend the time with them and that have the experience doing it.
And they're what, in every county or every city? Are they per county or
Yes,
per city? Per county, right?
I think it's 12 counties in New Jersey. So
yeah.
Where scores is that? Okay.
And all they have to do is search SCORE on Google, and they'll find somebody in their area.
Guys, we had 2 more questions that came in. What is the contact info to reach Lilibeth Herrera for a loan? And I would say that, of course, Enrique is going to be sending out
We could send everybody's information out.
We're going to send out the information.
Send
Like,
everybody's
we'll send it
information
out
to
to
everyone.
everybody. Yes, by all means. And that's going to come with the video as well. So yeah, Larry, give us at least maybe over the weekend, and you'll have it for sure.
Or if you give us the emails, we can send that out
Yes.
today, just the contact.
And I have
information.
Larry's email, and I'll send that over to you right away.
Yeah.
And again, Israel, SBA analysis arrests records of applicants. I didn't think that was allowable since SBA is a federal agency.
What was the question?
It's
does
right
SBA
there.
analyze arrest
Does
records of
arrest
applicants?
records of applicants. Do the SBA?
Oh, they're
analyze-
criminals?
Yeah.
You're talking about the criminals, right? Criminal records?
If they
Yeah.
have a
imagine-
criminal past, yeah, if they have a
I
criminal
would
record.
imagine. I would imagine.
Yeah,
Yeah,
they still do. They
do.
They do analyze.
Yeah.
And
I mean, it's just kind of, it's gotten a little bit less complicated, but definitely it needs to be disclosed. It needs to be supporting information has to be provided. It doesn't disqualify you necessarily.
Right.
You know, and it all depends on what is the history and what are what was the issue. But we need to understand, and we need to kind of make a determination based on that. But yeah, it does have to be disclosed, and proof needs to be provided.
Good. Enrique, I got to ask you, there were some other questions. Were you able to address that in your conversation?
Well, we're talking about the veteran. Are there any special programs for veterans with the SBA, or is it all the same?
I believe that there is a veteran program where there's some type of a fee waiver on the guarantee portion of the loan for veterans. Again, that doesn't apply to us necessarily because our loan cap is free. There's no guarantee fee. So I believe, you know, if you apply to a conventional lender for a larger loan amount, there may be some fee reductions there as a veteran.
Okay. Also, the other question was, do we lend in Puerto Rico?
There are CDCs in Puerto Rico. We only cover New Jersey, Eastern PA, and New York metropolitan area. But there are CDCs like us in Puerto Rico that can provide financing.
Just look at the deal. Okay.
Mm-hmm.
And then gas stations, as long as they're clean and there's no environmental issues, yes, we could do gas stations. The other thing was childcare centers. We could do childcare centers.
Yeah.
As long as it makes sense. It's all numbers. And then they were talking about the commercial co-op warehouse. Which was okay, that's what we're talking about, the first time buyer with the tax ID. But if you have a tax ID, you cannot get an SBA loan, which
Right.
we're assuming you're not a citizen, right? Okay.
Right. I mean,
But you could do a loan for a commercial co-op.
I would say I would speak to this person directly if they want to reach out to me and talk about it specifically, so I can understand what we're talking about with their client.
Tax ID.
Whether or not, yeah. So I could understand exactly, because there are different variations of citizenship that, you know, if they at least had one person with the citizenship, it might make them qualified. So, and again, co-op the commercial warehouse would have to be at least 51% occupied by the business owner. So, you know, again, no investment properties.
Lisa, are you guys national? Do you go all the states?
No, we only finance in New Jersey, and like Lilibeth said, the metropolitan area of New York and Eastern Pennsylvania. So we have a certain number of counties we can finance.
Are there other SBA companies that would go into Connecticut?
Yes, there are 230 CDCs nationwide, and they're regional. So if you Google again, CDCs in in Connecticut, or certified development companies in Connecticut, because sometimes you search CDC and you get the medical CDC. So just search certified development company in Connecticut. Because I don't know the names of them.
Gotcha. Okay.
And there is a
There's
list
normally
of
what,
all
2
of
or
them.
3, there's like 2 or 3 per state, right, normally?
Yeah, it
Depends.
varies. I mean, there's, yeah, like in New Jersey, I think there's like 4 or 5.
I thought it was like 3 of them, okay.
Okay.
Then
Three
the
active
one
ones.
question, in Puerto Rico, they were talking about a grow site. So I don't know if they were talking about grow for cannabis, which is what everybody's been asking about lately. And cannabis is not SBA.
Oh, there you go.
can't
There's
do
a,
it SBA.
there's an industry that is not allowable by the SBA.
Yeah, that's cannabis, because
Right.
they did write grow facilities, so I think they're talking about cannabis grow.
Not until it's legal at the federal level. It's
But
legal
you
in
could call
some
me
states.
and I do have cannabis funding.
Oh, that's good to know. 'Cause we get a lot of those requests.
Guys, I really want to thank you. Those are great. You guys are great. Very educational. I got to listen to it a couple more times, but boy, if anybody wants to know anything about SBA, I got this video, which I will definitely send it out to everybody. And I want to thank you. And this concludes, unless anybody wants to say anything right now, but this concludes our webinar.
Thank you.
Thank you.
Thank you, Enrique. Thank you, Lisa.
Bye
Lilibeth.
now.